Well, I got to say, the Jackson Hole presentation from Jerome Powell did not disappoint. I've heard lots of opinions about the speech. We obviously saw the stock market rip, crypto rip, bond yields fall. But was that an overreaction? Will we snap back? That is an interesting conversation. So, one of the things that I did for you is not only watch the speech, but I also read the speech. One of the things you could do when you are thinking about what was good or bad in something is both watch it and read it, because one of the things you will get is different tone when you watch versus read something. So, here are my 7 takeaways from Jerome Powell's speech. Then we talk about the US getting 10% of Intel, what some other Fed presidents said. So, again, lots of stuff going on. But let's talk about Jackson Hole. Number one, I will tell you that it felt like the market reaction was extreme. That was very much perhaps short squeeze, some short selling. The stock market up 900 points, crypto up, ETH up at a all-time high, seemed very much like a market overreaction. Number two, and this is perhaps most important, and I feel a little bit validated. Something you heard on this channel about a month ago is I felt that the Fed was about to declare jobs over inflation. If you've been watching Jerome Powell for any length of time, you know that he's been talking inflation, inflation, tariff, tariff. However, I think that changed at Jackson Hole. I think he has clearly said the downside risk to the economy, the downside risk to jobs, the untrustworthy nature of the jobs data has moved it clearly ahead of inflation. That is market moving. Number three, there are still plenty of risks ahead. We not only have a jobs number coming up, not only do we have a jobs revision, we also have a couple of inflation readings before the rate decision. So I do believe that the quote unquote September meeting will be live. I think there are plenty of Fed presidents who would rather stay on hold. I do think there are some that want a cut. And I will stay true to myself and still go with the unpredictable 50 basis point cut. More on that in a minute. Number four, it did feel like Jerome Powell was hedging. And it is my strong suspicion that Jerome Powell got an early look at the upcoming September revision. If you remember last year, it was the 818,000 jobs that disappeared that prompted the Fed to go 50. So we should know in about 10 days if my assumption, my suspicion is right. And if that is true, we might see something on the order of 1 million plus job revision. Number five, it does seem like they are going back and talking about average inflation or inflation targeting. It does seem like Jerome Powell wants to distance himself from this well-known 2% level. You've heard Jerome Powell talk about get back to 2%, get back to 2%. I think what he did in that Jackson Hole speech, in his final Jackson Hole speech, is he's trying to set up the next Fed chair to say we are going to go after average inflation versus 2%. Number six, tariffs. Tariffs will still plenty fearful. There is still the idea that tariffs will be coming. There is an argument to be said that this tariff is not one and done, like the textbooks say. Also, that it will be playing out over longer durations. The final thing is tariff boogeyman may not be as big as originally feared. Again, there was a lot of fear that tariffs would just be automatically passed on to consumers. That is proving not to be true, and it is proving to be true at very small levels. The original supplier, the wholesaler, the retailer are all eating part of these tariffs. So again, folks, I do want to remind you that we are doing something special. If you do buy the Erupt ticket, right, help me get to the first 100 ticket sales, I am going to do something special for you as a thank you. As of right now, I will let you know that I'm looking to give you $150 in value. Yes, I will be announcing once August is over what that means. So again, if you buy a ticket for $299, you come to a great event, you're getting $150 in value. Plus, you will be getting an exclusive Zoom call with me during the month of September. We will even do this Zoom call one of the evenings because I know a lot of you can't make mornings. So again, folks, go buy your tickets. Make sure you're part of the first 100, and you'll be getting some $150 in value as a thank you, and you will be part of a September call, just the first 100 folks. So buy your tickets, have some fun. So let's also talk about what happened on Thursday. We got pending home sales. They rose 2% to 4.01 million. Average or home sales now 1.55, up 15.7%. That is the highest level since May of 2020. And prices set a all-time record for July, up to 422,400, or up 2.2% year on year. Wage growth is comfortably above home appreciation, which again will slowly improve affordability. This is something I've talked about for quite a while. One of the ways through this unaffordability is unfortunately time and wage inflation. I do think it is interesting to understand that the product mix is still a problem. This is one of the reasons that the median home price is higher. For example, sales over 1 million are up 7%, 7.1 to be exact. Sales of homes below 100 grand are down 8%. Now, some of this is just, of course, price inflation. Some of this is inventory lock-in. But again, what we are seeing is inventory is continually transacting above the median and not below the median. We have been talking about that for several years. Looks like investors made up 20% of the market this past month, where it was only 13% last year. Why is that? Well, I think investors, that's you and me, we are writing disrespectful offers and getting them done. We did get some Fed speak before Jerome Powell. I have him here. It's really understanding who is on what side of the ship. We have Jeffrey Schmid expresses doubt about lowering rates in September. He says we are in a really good spot. Again, we're going to see if these folks change their tune. Again, I think Powell, as I said earlier, opened the door. I think Powell has signaled labor. So we will see if Jeffrey Schmid changes his tune in the next couple of weeks. How about Susan Collins? Well, she's on the other side of the ship. He says that we are open to rate cuts due to risk of weaker employment. We are definitely seeing the Fed bifurcate. Some folks are afraid of tariffs. Some folks are afraid of jobs. Fed President Collins expects inflation to rise through the year end, but then get better next year. How about Fed President Goolsbee? Current tariffs appear one and done. We do risk enduring inflation. Increase in service inflation is a dangerous data point. Remember, folks, when PPI came out, I explicitly highlighted services inflation. A lot of people look at PPI for goods inflation. It's the services one that could catch us by surprise. So again, Goolsbee is highlighting that as well. Fed President Hammack does not see an immediate case for cutting rates. Got another page of notes, sorry. Usually I have these spread out, but not today. How about Fed President Bostic? We should be able to bring policy closer to neutral in 2026, aka no cut in 25. Still believes that the underlying economy is robust. I believe Jerome Powell would disagree with you. Bostic says he is a one rate cut type of guy in 25 with more in 2026. Former Fed President Governor Bullard, sorry, I said President Governor, does not think the Fed will cut in September. Again, the market disagrees with you. And then finally, the leading economic indicators were down as expected, 0.1%. So what does all of this mean? Well, I think the thing to look out for next week is what happens Monday morning. And I think it's going to be what happens to rates. You know, are we really pricing in more than one rate cut for the year? Was the reaction in the 10-year note on Friday an overreaction, as I expect, or whatnot? So I will be watching rates. Mortgage rates Friday closed at a year-to-date low, 6.52%. Shout out Lance from Resi Club. Will they go lower? Will we go sub 6.5? That's an important psychological number. If we can take the average mortgage rate below 6.5, that means a lot of you are getting mortgages in the fives. And as I have said for quite some time now, 599 is where we will see demand come off the sidelines. Folks, I hope you have an amazing day. Don't forget to buy your tickets to the ORAD event. You know you want to go. I am going to be giving the first 100 people who buy their tickets, and there's only 5 or 6 spots left. You're going to get $150 in value in September, plus a unique 90-minute conversation with me where you can ask any and all questions. It will be a way for you to ask about real estate or my health journey or anything of that nature as a thank you. Again, why do I want you to buy tickets early? I'm clearly being selfish. One of the things you have to do when you throw on an event is you have to write some big checks. And I have about $80,000 going out the door in the next 70 days or so. And I would love for that not to come from me. I would love that to come from ticket sales. So if you can help me because you know you're coming, buy your tickets. I will give you $150 in value plus a unique phone call in September. Take care, like, subscribe, comment. Have fun.